How do we invest in these things that are so important? That's what we're here for. That's what Supercharged Stocks does, and that's what we're building. It's taking advantage of a lot of noise and a lot of chaos and focusing your attention, thinking critically, and applying it towards the market. Good morning, everyone. Welcome to the show. Today, we have FPX Nickel, and we have Martin Turenne, who is the president, CEO, and director of FPX Nickel. We're going to chat about the macro for nickel. It's had quite a year. I think it's up 25% for the year, a bit volatile. But really, when people are excited when talk about nickel, we're talking partly about Elon, because he's been talking about it, Elon Musk, but it's a whole electric vehicle and electric battery market that we're going to be talking about, and why this project is very compelling. It's been a while since we've caught up with you. Martin, how are you doing?
I'm doing great, Andrew. Good to chat with you again.
Good stuff. So where to start? Let's just start assuming that some of these people are they are generalists. Is why do we care about nickel? Your grades, the different types of nickel, so we get a bit of a macro as to why nickel should be on people's radar.
Yeah. So why care about nickel? It's probably the metal, the major base metal that stands to benefit most from a demand standpoint from the entire electrification of our world and the move to low carbon modes of transport and carbon mitigation, generally speaking. So Glencore, for example, which is one of the largest mining companies in the world, put out a report a few months ago kind of quantifying the demand impact of electrification on the major metals that are used in electric vehicles and in other low carbon technologies. And they saw that the copper demand, for example, over the next 30 years is going to grow by twofold. So copper demand in 2050 will be approximately 2x what it was in 2020. For nickel, it's going to be about 4x. So the exposure that people get to the electrification thematic from investing in nickel is huge because of that sort of massive demand impact on nickel. And that's because nickel is one of the biggest components in the electric vehicle batteries. Nickel is really the secret sauce, so to speak, that allows the EVs to have the batteries themselves to have longer lives between charges, and also to have faster charging times. So we can reduce those charging times from vehicles down to, let's say, 30 or 20 minutes down to ultimately, 2 to 5 minutes would be the goal.
Perfect. And also, just for someone who's kind of new to it, there's two different types of nickel. So I'm going to be very general, say half the nickel can't be used in an electric vehicle or battery, and the other half can. And that comes down to the two segregated types of nickel and grade.
Yeah, it's a little bit more nuanced than that.
Yes.
I would say that at the end of the day, any type of nickel that you might find in any kind of host rock anywhere in the world can ultimately go into an electric vehicle battery.
Okay.
It's a matter of what the cost is to get it there. Right? It's kind of like the same thing. You could say there's a lot of gold particles floating around in the ocean, but you really couldn't mine sort of ocean water for gold in any kind of economic way.
Yes.
So any nickel can go into EV batteries. Now, the advantage with FPX, our company, is that we think we've got, with our unique style of mineralogy, where the nickel is hosted in our deposit in British Columbia here in Canada, is that it can be very efficiently recovered into the form that's needed for EV batteries, which is a chemical form and a very high purity form. And because we have low content of things like sulfur and arsenic and other nasty elements in our host rock, we think we've got a huge competitive advantage to taking the nickel out of the rock and into that chemical solution form for those batteries in a way that's very economically advantageous versus the other different types of nickel out there.
I think highlighting, now we kind of see the general market is, you guys are in British Columbia, so you're a Canadian British Columbia company. And is it an alurite deposit, or that's a type of style of deposit? And I want to mention it too, because obviously everyone knows I'm not a geologist, but I do know from speaking to you in the past, your story is very different because it isn't a discovery. You have a PEA, you have bigger exploration and upside potential in the size of this, but especially because of the world we're in with ESG, with carbon emissions, and people being very cognizant of how we're getting resources, this deposit itself is exceptionally unique.
Yeah, so just a quick thumbnail. So FPX controls 100% of the Decar Nickel District, which is a huge land package in central British Columbia. Within that, we have a defined deposit called Baptiste. Baptiste is the third largest undeveloped nickel deposit in the world. There's over 7 billion pounds of nickel contained in the deposit. And the nickel price, just for reference, is currently trading over $9 a pound. So the nickel at our deposit is hosted in a mineral called awaroite, which, good on you for the correct pronunciation there, Andrew. And that is a form of nickel that can be recovered using magnetic separation. So it's a very magnetic mineral. Most of the rest of the host rock is unmagnetic or non-magnetic. And so you can actually use a very sort of clean, efficient manner of separating the magnetic nickel from the non-magnetic host rock in which it's contained. And so the method of recovery then leads to something that's actually relatively green and clean versus a lot of the heavily chemically intensive forms of nickel recovery that are required for other different types of nickel deposits, whether those are sulfide deposits or laterite deposits. The other key thing here is that our proposed mining operation would be powered on the hydroelectric power grid in BC. This is one of the key advantages of British Columbia and really generally Canadian mining projects in general, is that Canada and BC specifically has abundant hydroelectric power that is low cost in Canada, given its abundance, but importantly, it's also very low carbon. It's almost a zero carbon source of power. So that means that Canadian mining operations, BC mining operations can have among the lowest carbon footprint for any mining operations anywhere in the world. Why is that important? Well, if you want nickel going into an EV battery, for example, you don't want it coming from a source from places like Indonesia or China or the Philippines, where it's highly carbon intensive to extract that nickel and to process it. Here in Canada, we can extract it and process it with very, very low CO2 emissions associated with it. And so that nickel can therefore more suitably go into an EV for consumers and car makers who are very conscious of the CO2 footprint of their operations. So that's a huge competitive advantage that Canadian operations have, and particular advantage with respect to our deposit type in how cleanly we can recover it from the host rock.
And I think people are becoming much more aware of that. And certainly I'll recount, and I like to talk about Digby once in a while. A friend of the show's Jamie Strauss, who's got Digby, who presented at the G7. He was on the show and talking about how, and he works with BlackRock, which is almost $10 trillion worth of assets now. And he's saying that all these big companies are well aware that you need to have mining. It needs to be mining focused, but it's just a matter of fitting it into this ESG plan. And finding projects is challenging to meet that. And yours, I mean, I'm not going to speak for Digby and their evaluation process, but from what I know about ESG and from what I know about your project, yours certainly would be of interest to any kind of funding company or anyone looking at a project that is going to meet a supply chain for North America. You're close to lots of users that require this, Tesla being the obvious one that to come to mind, but plenty more. But you have this built-in ESG that you've kind of developed on your own anyway, to kind of foresee or to see what was going to happen in the future whenever people realize and put it all together. We need mining, but how do we get this out the most efficient and clean way?
Yeah, absolutely. We've been an innovator in that regard. I'll just share my screen here. And
yeah, perfect. Yes.
Just one second. Yeah, so if you can see that, Andrew.
Yep, let me just add this here.
So yeah, just let me know when you can see that.
Yeah, we're good.
Okay, excellent. So this is a chart that shows very simply at a glance what the carbon footprint of nickel production in the world is. And what you can see, for example, nickel that comes from this source, something called nickel pig iron, for every ton of nickel that gets produced, 69 tons of carbon dioxide are emitted. Down here at the other end of the scale, the modeling that we've done shows that for every ton of nickel that we would produce from our project, only 2.4 tons of CO2 would be emitted. So there's a huge disparity there. And again, it's only really, at the end of the day, it's only low carbon nickel that's going to find its way into electric vehicle batteries. And in fact, the European Union has put in some draft legislation that is saying that from 2027 onwards, the EV batteries will have to come with certifications that show
Yes.
how much CO2 has gone in to make that battery.
Yes.
And above some certain threshold, if you're Tesla or Rivian or any other company, you won't be able to sell your EV in that market if the CO2 associated with producing that battery is over some certain threshold. So this is starting to really impact on access to market
Yeah.
based on where the nickel is coming from and how it's being processed.
And that's certainly key too when someone's going to evaluate the property and they'll say, well, you've got good grades, it's an open pit, you've got infrastructure, you've got all these positives, but perhaps this other project XYZ in Finland might have slightly better grades, slightly better this, that, everything else.
Yeah.
It's not taking into account every factor that is certainly coming down the pipeline that I don't think anyone would deny, especially anyone who's been following the sector and the development of ESG. And I mean, the loudest voices out there are flat out telling you where they're going. This is a key factor of someone saying, will a project actually go forward?
100% it is. I mean, I was listening to a recent presentation put on by Chevron. And so the CEO of Chevron was speaking. He was speaking about their assets, their oil and gas assets. And one of the main points he made was that as they look at which projects in their portfolio they're going to greenlight for putting into production, that the CO2 emissions end up being one of the biggest determinants of whether that project will get greenlit. Meaning if there are two projects sitting side by side in their portfolio, one is high CO2 emitting, the other is low. The low CO2 emitting project goes to the top of the list in terms of projects to develop. All of these companies, the oil and gas companies, the mining companies, and really most major companies in any industry have started to make these commitments to the public that they will be carbon neutral by 2040 or 2050. And so for mining companies, that will mean that going forward, their decisions on which projects to acquire, which projects to ultimately build into mines, will be determined in part by obviously financial considerations first and foremost, but the CO2 considerations are massive because they just simply won't be able to reach those CO2 neutral goals if they're putting into production a bunch of high emitting new projects.
And we're going to talk in detail about the project and about what's happening as well, but I'm just going to throw this out before as well. This is a different curve, and we talk about the Lassonde curve when we're talking about different projects, and people get excited about the speculative part and when they're finding a discovery, and people may not be as concerned about what the ESG, if it'll even become a mine. It's like we've hit some intersects, we've hit some numbers, the stock goes up, everyone gets excited, there's money to be made. This is not that. So this is a different mindset. So everyone has to put on a different hat rather than a discovery type of excitement. This is more of the actual reality of this can become a mine, and what does it take for that to become a mine, which can be exceptionally profitable. And we'll let you get into some of the details of net present value of what I think you've got there. I've got a bit of an idea. But that mindset involves much more technical considerations, never mind just the engineering, permitting, everything else to actually make a mine. But this goal that we have, that I think everyone will admit is going forward is critical, is such a key factor. This carbon score, they're going to have software developed, I'm sure, in the next year or two that will be able to tell you precisely what those standards are and what you have to meet. And even if you've got a project that looks really attractive and was a discovery 3-4 years ago, it may never get the green light. So knowing what can actually go into production, because you're in a different phase of the market than a discovery model, is that yours over some other project certainly has the potential to actually become a mine compared to some others that may not have that ability.
Yeah, I mean, I think what you're talking about is there's two broad metrics, generally speaking, that people are going to gauge projects by here, I think, going forward. One is where it sits on the cost curve. So to your point, how low cost a producer can it be, whether it's producing gold or nickel or copper, whatever the case may be. You want to be as low down on that cost curve as possible. You want to have the low cost of production. Then there's the carbon curve, what I've been calling the carbon curve for the last year or so here. where do you sit on that carbon curve? Are you at the high end of the carbon curve in terms of tons of CO2 emitted for every ton of metal produced, or are you on the low end? And the projects at the low end, such as ours, will be the ones that are going to be favored in this world, both as a result of sort of government mandates, as well as sort of the objectives of all of these public companies who are seeing, the benefits to expanding their shareholder base by appealing to that type of investor who is sort of environmentally conscious, and also by the fact that you're seeing, a lot of the major institutional, pools of capital in the world, divesting themselves of highly polluting stocks in their portfolio. So these companies are driven by the actions in large part of some of those big institutions. So that these are, the pension funds, sovereign wealth funds, university endowment funds that are divesting their ownership interests in highly polluting companies. So from a company standpoint, you don't want to be part of that basket that's being thrown out, or that where the baby is getting thrown out with the bathwater, so to speak.
Yes, and also maybe at the whim of, will we discover some sort of technology we can add and help projects along the way? Great, we might. That there could be all sorts of technology in the future, but I'd rather not have to hope that something gets developed or created to make the scenario better whenever you are sitting on one, anticipating it already, that can move forward. And like you said, you've done work with University of British Columbia as well.
Yeah, we've done a lot of work. One aspect we haven't talked about here, Andrew, is the ability of the tailings material. So that's the waste product from our deposit to actually naturally sequester carbon dioxide. So I mentioned earlier that we can have very low CO2 footprint based on the fact that we're on the hydroelectric power grid. Beyond that, over and above that, we can also sequester a lot of carbon dioxide in our tailings facility. So our deposit is rich in a mineral called brucite. Yep. And when you expose brucite to air, it will actually seek out CO2 from air. It will suck the CO2 out of the air. It forms a chemical reaction with the CO2 to lock the CO2 away in a mineral form in perpetuity. So the tailings facility, the waste facility here, would effectively act as a huge carbon sink, or a carbon vacuum is one term I've seen an analyst use. And that would only further reduce the carbon footprint of our operations here. And it's something we've been spending quite a bit of time over the last 5 years studying with some of the leading researchers in the world, working out at the University of British Columbia here in Vancouver.
That was one of the most fascinating parts. I remember years ago when we first talked, and I just getting my head wrapped around that. I was like, how? I mean, it makes sense. Like, once again, I'm not a geologist, so I don't know how the process works. But I was like, this is absolutely fascinating, because a lot of times people will complain about the tailings pond. They'll say, listen, is it secure? We're worried about this. We're worried about that. Whereas this all of a sudden potentially becomes a selling point that you're saying. And this is very unique as well. This isn't just nickel deposits around the world. This is very specific and unique to your deposit, which I guess is in one way sad for the rest of the world that not all nickel deposits might have this, but certainly exciting for the Decar project and with FPX Nickel.
Yeah. I don't know if you can see my screen there, Andrew, but
here, let me share that.
Yeah.
There.
So this is kind of a concept of how it works. You mine the deposit, you extract the nickel into the processing facilities, then the waste rock goes into the tailings facility here. And as you can see, the chemical reaction is summarized at the bottom of the screen, the bottom right hand. So CO2 plus magnesium from the tailings plus H2O forms this hydrated magnesium carbonate cement. And you can see the chemical formula of that carbonate mineral there. So that is a way of basically taking the CO2, you mix it with H2O in our tailings, and it binds that CO2 away in perpetuity. There's a lot of people talking about carbon capture right now. So they're trying to suck CO2 out of the air using, large
algae.
Industrial sites,
yeah,
algae, and others have designed these almost things that look like a fridge that will actually just suck CO2 out of the air. The issue with that is that once you've sucked the CO2 out of the air and you've got it sitting in this fridge, what do you do with it, right? Where do you put it? Where do you actually store it in the long term? So we can set up a bunch of these fridges all over the world and suck a lot of the CO2 out of the air. But if it's just sitting in these fridges, where does it go from there? The solution that we offer is that not only do we capture the CO2, but because of that chemical reaction, you're actually storing it in a safe mineral form for eons. and so effectively in perpetuity. So that's the kind of the key here. There's a lot of hype around carbon capture, but not a lot of people are talking about the storage part of that.
And so, I mean, and we're talking your mine life. We're talking decades, but let's just say you're storing it. I mean, you could just leave it basically in a vault in the ground still because it's not harming anyone or doing anything. But is there anything that you could do as a byproduct? Like, does it become another product or another kind of auxiliary benefit to you guys as well?
Well, I mean, in certain scenarios, like, if you had an injected source of CO2 that you were flowing through our tailings, you would take that tailings material, which is sort of wet, sort of sandy material, and you would actually stabilize it into almost a cement type material. And then you would have, potential for sort of, building materials there. In a sense.
Interesting.
But that's not something that's any kind of part of the base case. That's more of a part of the conceptual evolution of this idea.
So this is fascinating. So, I mean, let's go look through some slides if you want to bring them up or any extra details. Sure. But I wanted to make sure that people heard about this, so they got an idea of why nickel's so critical. And we always try to find unique, like not just a macro outlook for a mineral, but a company that really is unique, that stands out, that people will want to cover and follow, because it gives a highlight of that there's so many management projects and teams out there that are doing amazing, wild things that we just don't get a chance to hear about. And this is certainly one of them.
Yeah. So I'll share my screen here for a bit of a satellite overview there, Andrew.
All right. We've got it.
You got it? Okay, good. So yeah, this is our land package. We're in central British Columbia. You can see the yellow outline here. It covers an area of 245 square kilometers. So it's a very large land package. It's something that we ultimately think could be a multi-generational nickel producer. Within that, we've defined the Baptiste deposit. The Baptiste deposit is the third largest undeveloped nickel deposit in the world. Okay, so as I said, 7 billion pounds of nickel contained there. If some of your listeners are more familiar with gold deposits, they can probably do a back of the napkin equivalency, but this would also be, a very, very large, no matter the type of metal you're talking about. 6 kilometers north of Baptiste is what we call the Van target.
Yep.
So the Van target is the thing that we're most excited about in the last couple of weeks. Actually, just last week, we announced the results of the first ever drill program at this Van target. And that drill program has been very successful. The first 2 holes were released last week. And what we're seeing is that we have another major nickel discovery here. Wow. I'll kind of just layer on the rock samples that show where in past years we've taken samples of rocks that this is bedrock coming to surface in outcrop. Yep. Every kind of colored square that you see here represents where we've taken those samples of bedrock coming to surface. And if we zoom in here, you can see the initial drill holes that were put in. You can see the red traces here on my screen. I'll circle those in blue. So this one here is Van hole 1, Van hole 2. And I'll show you what those look like. In the subsurface, you can see that we've hit very long intercepts there, a very strong mineralization of nickel that actually exceeds the grades of what we have at Baptiste.
Nice.
So the two holes have confirmed that this is another major nickel discovery, and we've got several more holes that have been completed that will be planned for release in the coming weeks. So you said earlier that yes, we have a big defined deposit that is moving through the sort of pre-feasibility study work towards an ultimate, construction decision in the years to come. But we also have a lot of excitement that we can kind of share with the market around the potential for new major nickel deposits within this land package.
Awesome. And I just don't mean to interrupt, but that graph is on your website, FPX Nickel.com. And it's interactive. You can check it out. You can also send me or Martin an email. We'll send you the presentation, the link to there. But just so you see, anyone watching, all of these graphs, all of this data, and that interactive screen is on the website. If you want to pull up and go over it in more detail, I just want people to know and listeners to know that that's there. It's not something you even have to reach out to us. So please go ahead.
It is on the homepage there, and it's a pretty cool tool to allow people to kind of interact with the model in 3 dimensions and kind of get their own sense of what we have to kind of discover there. So I'm just switching my view here in the share screen, Andrew, to a slightly different view.
And I love this
And
first page. Yeah, that first car with the
yeah,
sorry.
yeah,
I love it.
that's the obligatory kind of tie into this sort of the green
Yes, yeah.
energy revolution, right? And obviously we know the importance of nickel. So I'll give everyone just kind of a quick sense of where the project is located. We're here in central British Columbia. The land package is called Decar. We're 80 kilometers west of Mount Milligan, which is a very similar scale copper gold mine that has been in operation for many years. So this is a part of the province of BC that's well known for mining operations that tend to be very long-lived mining operations like what we have planned here. I won't go into a lot of detail on a lot of slides here, but I might just dwell on this one for a moment.
Yeah.
One thing that you'll notice about the nickel industry, I'm sure you know this, Andrew, and some of your listeners may be aware, is the nickel price was low for a long time, really between 2012 and 2019. The nickel price was very, very low, and a lot of production globally was actually losing money at the nickel prices of that era. And what that led to is really the decimation of the junior nickel industry. There were, 8-9 years ago, there were about 50 or 60 junior nickel companies listed on the venture exchange in Canada, and by 2019, there was maybe only about 5 of them left.
Yeah. Yeah.
So not dissimilar to what you've seen maybe in the uranium space, where there had been a total washout in terms of the number of uranium juniors out there. The same thing happened in nickel. And so this screen shows really all of the nickel projects that are controlled by and large by junior mining companies that are listed either on the Australian exchange, in the UK, or here in Canada. And the first thing you'll notice is that there aren't many bubbles on here. There are not many advanced stage nickel projects sitting in the hands of junior companies really anywhere in the world. So within that, we think we are very well positioned with our Baptiste deposit, which is our advanced stage deposit. The bubble size refers to the scale of annual production. The horizontal axis here shows the mine life, which is estimated to be 35 years for our project. And then the vertical axis shows where it sits on the cost curve. And you can see in terms of scale of annual production, mine life, and cost and positioning on the cost curve, we think we're very well positioned within the peer group. At the same time, we do think of this as a kind of still quite a low sort of market cap vis-a-vis what our NPV is.
Yep.
So net present value on an after-tax basis using an 8% discount rate in the recent economic study was 1.7 billion US. Our current market cap is only around 100 million Canadian or so.
Yes.
So this is an interesting metric, I think, for people to look at. These are all base metal junior mining companies that are advancing or developing single assets within their portfolio. And you can see that companies at this stage typically trade in the range of 0.15 to 0.2 on a multiple basis to their underlying project value. And we're trading well below that. So we view this as still a very sort of deep value opportunity at this point in the cycle.
And that's not taking into account all of the other factors that the auxiliary benefits, what we've already mentioned as well. So that's just pure numbers, pure NPV. If you're just an analyst and you're just looking at this thing, just numbers, you're not taking anything else into account, which is compelling.
Yeah, for sure. And so ultimately what we see with the strategy here for the company is we're sitting on a very large project. It could, based on what was modeled in that economic study, this could be one of the 10 largest nickel mining operations in the world, producing around 100 million pounds of nickel per annum. So the revenue potential is close to sort of $1 billion US per year over a mine life of 35 years. And the production costs are estimated to be below $3 US a pound for every pound of nickel produced versus the current nickel price of just over $9 a pound. So you can see it can be a very high margin project for a long time in a stable jurisdiction in BC with that low carbon footprint. So we think it meets kind of all of the requirements to ultimately sit in the hands of a major mining company. And all the work that we're doing in the coming period of time, weeks, months, and years, is to continue to de-risk this asset and ultimately having it, sit on a platter for a takeout, hopefully at a much higher level than where we're trading today.
Yes. And then, so how much more discovery, or how much more drill targets, or how much more work are you doing on that van site as well? As, are you kind of snooping around anywhere else as well, or what's the thought there?
Yeah. So I'll kind of pull up the map here again. Just move to the share screen. Yeah, just let me know when you can
All
see
right, there we
that.
go. We're good. Yeah, we're good.
Yeah, so as I said, Baptiste, third largest undeveloped nickel deposit. You can see what a small part of the overall land package it covers. It's kind of,
Yes.
3 to 4% of the total land mass is represented by what's at Baptiste. Van, it looks like we have the makings of another major discovery there. In the past, we've also done drilling at these targets here at the B target and the SID target, which
Yes.
have returned long intercepts of this same style of nickel mineralization. So there's
Hmm.
more work to be done there at B and SID, and to try to understand if they are potentially sort of connected here at the subsurface, which is part of the sort of the geological thesis. In which case, if you had a combined, target there that is connected, you would have a third kind of world-class deposit in the making. So you'd have, this one here, which is the third largest in the world, Van, which is showing that it has all the potential to be just as large as Baptiste, if not larger, and then more targets here that might form a third very large deposit. Outside of that, there's a lot of reconnaissance work that we've yet to do really throughout the land package to see if we could define additional targets there. So, Canada is known really as a center of the nickel mining industry historically, principally due to production from Sudbury.
Yeah. Yeah.
Which is known as Nickel City for a reason. It's the sort of powerhouse of nickel production globally. We ultimately think that the nickel endowment that we can demonstrate here at Decar can ultimately rival Sudbury in its scale and its potential to sort of have that global impact for not just years or decades, but in fact generations to come.
Very compelling. Very compelling. This is why I wanted you on the show, because it's wrapping and tying in all of these things that we talk about here on the show as well, and seeing the future and having strong management and companies that have also acknowledged these changes that are coming, that are wanted, but have realistic projects. And yours not only has the PA where it's a realistic project and all the auxiliary benefits we've talked about, there's this big upside, because sometimes people think, oh, they put a PA out, it's over, it's done, let's just see what happens. That's not the case here at all. And I think that's what brings a real sweetener to people looking and going, oh, I've got some security here on all of these factors, never mind the PA, but we also have this big upside with these two other land package, or not land, but land sites or
Targets. Yeah.
Targets. Yeah.
Yeah. Yeah, absolutely. It's about, we know that, there's hard yards in doing the meat and potatoes work to develop a mineral deposit from discovery through pre-feasibility, through definitive feasibility, through the permitting process. And that stuff isn't always sexy or flashy for investors.
No.
But it's stuff that you need to do. We're in the business not just to make discoveries here, but we're serious about wanting to build mines.
Yes.
A lot of companies, I think, in our sector, they want to pull some flashy holes. They want to raise a bunch of money. They want to pay themselves. Management wants to pay themselves well, but they're not too fussed whether a mine ever gets built or not.
Yes.
Within our team, we've got, not myself personally, but most of our directors have a long track record of having not just discovered, but developed, constructed, and operated some major mines globally, both in BC and abroad. And so this is not just about sort of pulling some nice grades and trying to raise some money. It's really about ultimately seeing the development of a mine here that can be a positive contributor to the provincial economy, to the local economy, that can be done in kind of close collaboration and partnership with our First Nations partners, and ultimately can help to deliver the nickel we need as a world to mitigate some of these climate issues that we're facing.
Yeah, I love when you've got a company that has already anticipated these issues, is committed to the environment, is committed to a process, has thought about them years ahead of the time before they become kind of popular in today's nomenclature. And once again, it's the biggest distinction, and you've said it a number of times, and I have too, is that you're literally looking at trying to build a mine, and that isn't always the case. And in fact, most of the time, a project's never going to get to that kind of stage. This is at that stage, and that's a far more exciting one because it's more realistic that it can happen, and that criteria is critical, that you've already met all the boxes and you've checked all the boxes for. And I think you've done a great job too in your presentation of highlighting on a bunch of pages and slides of checking off each box that one needs to see for someone to be interested in this project as in mine. And once again, I want to thank you for taking the time to walk us through this and let people know that this is happening right in our backyard, literally in our backyard here.
Yeah, no, that's great, Andrew. And, you know, it's, I'm always happy to hear from potential investors or shareholders as well. So, you know, whatever means your audience has of reaching out to you, please feel free to do that. And I'm sure Andrew can pass that information along to me. And I'm always happy to interact with investors, no matter how big or small their portfolio happens to be.
Perfect. Well, thanks so much for joining us today. And yes, everyone, reach out, send me an email, send me a text if you've got my number, and I'll connect you with Martin. And also, if you just want the presentation or the website, feel free. I can forward it on to you. But it certainly is one that you should have on your radar because it really does, you know, as far as I can see, it hits all those milestones, all those check boxes. And it's certainly one that we want to see move forward, and also to see what the results are on these other targets that you've got. Thank you so much, Martin. Really appreciate it. FPX Nickel. Take a look at their website.